Hey, welcome to the channel, guys. In today's video, we are going to look at the difference between residential and commercial real estate. We're going to look at the different financing requirements for each, and also the different types of properties that exist, and look at what are the main components that you need to look into when assessing your commercial real estate. And then finally, we'll look at the current state of the market and versus the outlook. So let's look at the difference between residential and commercial real estate. So for residential, it includes properties like single-family homes, 2 to 4 unit multifamily properties, duplex, triplex, fourplexes, as well as condos and townhomes. However, for commercial properties, commercial real estate, you have multiple different types. The first one being office buildings. Office buildings are basically properties that house business operations as far as corporate offices, government buildings, medical centers. All of these contribute to office buildings. The next type of commercial real estate is retail properties. These are the typical retail properties such as shopping centers, strip malls, storefronts, and most people, when they think commercial properties, they typically think of retail commercial properties. The next type of commercial real estate is industrial properties. These are typically manufacturing, distribution, and warehouses, factories type of properties that fall in this category. And the next category is multifamily properties. These are apartment complexes. Any units, 5 units or more, are considered commercial properties or commercial real estate. Condo complexes, all of these types of properties fall under the category of multifamily under commercial. And the next one is hospitality properties. These are typically the hotels, motels, vacation rental properties, again, that fall under the commercial guidelines, which is typically 5 units or more. And then you have the special purpose properties. These are typically the self-storage facilities, the car parks, and some religious institutions fall under the special purpose properties. So let's look at financing differences between residential and commercial. So typically for residential, as we discussed in the prior videos, the banks are looking at the borrower and his or her capability of repaying the loan. So meaning they're looking at the borrower's credit, they're looking at their income, how much money they have saved up for the down payment, and then their risk factor is all based off of the borrower. Of course, they assess the property for its value and the condition, but it's heavily dependent on the borrower on the residential side. Versus on the commercial side, it is heavily dependent on the real estate itself. So it's heavily dependent on how much income it's producing, the condition of the property. Of course, the borrower's credit worthiness is important, as well as their ability to manage that type of property. For multifamily properties, for example, they look to see if you have any experience managing properties of this type, and that goes into factoring in whether you qualify or not. But again, the major difference is on the commercial side, they factor in the income that the property produces, and they take into account the property more so than the borrower on the commercial side. And on the commercial side tends to be much more stringent, and I can make a whole video on commercial mortgages, how they work, what are the different steps that you need to take, and we'll cover that in that video. So one of the important factors to look into when assessing a commercial deal versus a residential is cap rate. Cap rate is basically the capitalization rate. It is a metric used to evaluate income-producing properties in general, but mostly commercial. This is a very important number. It is essentially the net operating income over the purchase price. and we'll cover examples in a little bit, but essentially you just take the NOI and you cover it over the property purchase price, and you get a percentage, and that's the cap rate. So based off of that number, if the cap rate is higher, it means it's generating a higher income, the property is generating higher income, which makes it an attractive investment overall. Again, that's not the only factor, but this is a quick factor to determine how much money a property is generating. So let's look at a quick example. You have a property that has a 5% cap rate, and it is generating a net operating income of $100,000. So based off of that, you can do the calculation and determine that the property value is $2 million. Again, to determine the property value, or the cap rate in this case, you could take the value, $2 million in this example, and then the NOI, basically divide the NOI over the purchase price or the value of this property, and you get 5%. Now, using the same exact property, let's say the cap rate is 6% instead of 5%, right? Same net operating income, but the cap rate goes up to 6%. So now it means that the value of the property went from $2 million to $1.66 million, right? So this is important, guys, because we will discuss in a little bit the differences between markets. The current market in the past couple of years, the commercial real estate market, just like the residential market, has been hot. And cap rates have been going lower and lower, which means that the value of the properties have been going higher. Now there's going to be an adjustment that's coming. A lot of analysts and experts are predicting that the commercial real estate market is going to take a hit, especially due to the rising interest rates. So in this example, if you have the same property that was selling for $2 million last year because the cap rates were 5%, well, in this new condition, in the new market, that same property will have a higher cap rate because of interest rates going up, which means that the value went down to 1.66. That's almost a $400,000 hit for the owner. So this is very important to understand, guys. As you are trying to invest in commercial real estate, you need to understand this concept. Alright guys, thanks for watching this video. Again, don't forget to like and subscribe. If you want me to cover more on commercial real estate and mortgage process, getting a mortgage process for commercial real estate, please let me know in the comments below. Until next time.